Chapter 9, we're going to discuss conversion investigation methods. So if you remember in Chapter 7, we discussed investigation methods related to the Theft Act, so surveillance and other things. In Chapter 8, we discussed investigation methods related to concealment, which is the most common investigation methods that we use as forensic investigators. But under Chapter 9, we still can potentially do investigation methods under conversion. And this is when, and if you remember the elements of the fraud triangle, not the fraud triangle itself, but the fraud element triangle, where we have the theft act, the concealment, and then the conversion, where they're converting the stolen goods to cash. So those are the type of methods we're going to be looking at today. And the learning objective is explain why it's important to find out how perpetrators convert and spend their stolen funds, understand how federal, state, and local public records can assist in following financial tracks of suspected perpetrators. We're going to talk about accessing information via the internet, and then how to perform a net worth calculation. So conversion searches, there's two reasons. The first thing is we want to determine the extent of the embezzlement. So we want to figure out how much this perpetrator could be embezzling from the organization. And then also to gather evidence that we can ultimately use to get this perpetrator to confess. So if we can show that they were able to buy a new car and a new house, and buy new paintings and spend extravagantly, and we can show that their only source of income was their income from the organization, then we put them on the spot, and then it makes it harder for them to deny that they have stolen goods. So, and then also, as we sort of figure out what they're worth, we can determine how much they potentially stole from the organization. So we're going to talk about all these things as we go. And then the most common technique, like I mentioned here, that we use to investigate is always interviewing. So it's not just interviewing under conversion investigation methods. We do a lot of interviewing under concealing and interviewing when we're talking about potentially catching people in the act. So interviewing is something that we do throughout the investigation. We use it to gather information about who could be involved, how the fraud could be perpetrated, and then how much. And so under conversion searches, we're primarily asking the question, how much? How much could be stolen? And we can gather a surprisingly large amount of information about individuals from federal, state, and local agencies. There's also private sources of information that we can go to. Pay sites where we can get information, and then obviously online sources of information through Google searches and other things. And all of this information that we gather, we can use to perform a net worth calculation. So we're going to talk about all these different sources. Public records, the federal government, the state and local government provide records. The best example of that is the county assessor website. So if you go on the county assessor website and we know where somebody lives, we can find out how much they paid for their house. Under private sources of information, there's utility records, credit rating agencies, banks. They all have information about individuals that we can get if they turn that the individual turns that private information over to us. There's also other ways to get private information. We'll talk about those. Obviously, online databases. There's some that charge a subscription, and oftentimes these organizations that charge a subscription, they've already done the free public search, and they gathered all the information about one individual in one location. So you just have to pay the site to get that information all in one location. But a lot of the information that they gather is free and public, and we could do it ourselves through internet searches, which is the last thing here, using Google and other search engines. So I don't want to talk about individually about all these different sources of information. But as we go through these slides here, you'll be able to see the different sources of information. And then in the book, it describes what you can get from the Department of Defense, the Department of Justice. You can obviously find out if they've been in the military, if they have a criminal background. The Federal Bureau of Prisons find out if they've been detained in prison. IRS, this information is not usually available. So we usually have to get tax returns and others through the individual or by a subpoena or through some other means, which we'll talk about. The Secret Service has a lot of information. We think of them as being the ones who protect the president, but they also, they're the primary investigators of counterfeiting, for example. So they have sources of information. The Postal Service obviously has lots of information. The CIA and the Social Security Administration. So they all have information that we can potentially use to find out the background of an individual. Because what we're trying to do is search their background and find out how much they're worth to help us determine how much they could have stolen from our organization. So in all these sources of information, there's a description, there's a paragraph or so description in your book. But as we can sort of tell by looking at the type of information like State Attorney General, we can find out if records related to individuals who have been convicted of state or criminal laws, obviously the state prisons. So this is state information. The Secretary of State, so they have information related to businesses, if they've been incorporated in that state. The Department of Motor Vehicles obviously has information about the driver's license information. Department of Vital Statistics has birth records, so you can find out when somebody was born. Department of Business Regulation, also information about licensing of various individuals. Maybe they're real estate agents, maybe they're CPAs and others. There's information about their business in the Department of Business Regulation. County offices, the county clerk has marriage licenses and divorce information. And I was just thinking of a case where somebody that I knew in college, I was doing a search to find out where she lived, and I found out through public records, basically I determined through a Google search that she'd been divorced from the person that I knew when they went in college that she had married. So, you can provide, and just doing searches, even doing online Google searches, you can find a lot of this information. Or you can go directly to the county clerk's site and look up the individual's name, for example, if you knew where they were married or where they were divorced. The county land office and tax assessors, like we mentioned, you can find out real estate records. And primarily you can glean from that how much that they paid for their home. Again, that's going to help us determine a net worth calculation. County Sheriff's Office and other offices, obviously, will find out about criminal charges. The local service, so local courts, again, local courts are going to have potential information about divorces, property agreements, settlements, civil cases that the person's been involved with, whether they're filed for bankruptcy and other things. So we can glean all that information from local courts, the permits department, so we can find out information about health permits and other things. So, like it mentions, you got to be use caution here, because even though information may be available, we want to be sure that we have the legal right to gather and use that information. So we want to be careful. Even though we can get the information, we need to be certain that we can admit this information into court. Otherwise, it'll hurt our case. And then laws, especially those dealing with the internet, are still changing and evolving. But that's why it's best to know because in terms of forensic accounting, we're thinking all this information that we're going to gather potentially is going to wind up in court. So we need to know the rules of evidence, which if you take fraud in the law, we'll just spend a lot of time talking about that. And to make sure that any of this evidence that we gather that's public information, but even though it's public, we need to have the legal right to own it or to possess it so that we can get entered into court, if we do indeed get that far. So some private sources of information, utility records. We can interview acquaintances of the individuals. And there's mentions here trashing. And that's if a person has information that they threw away that's in their trash, and they put that trash out on the curb. Once it leaves their property, we're free to seize it and search it. So if they've thrown away bank records, they've thrown away credit card statements, they've thrown away tax returns, and that information's in the trash, as soon as that trash leaves their house, we're free to grab it and search it. And even if they've shredded that information, there's computer programs that are so good now that it's like a puzzle piece. You can scan in all the shredded information and they'll piece it back together. So even though they've thrown it away, and even though they may think it's secure because they've shredded that information, it's not all that difficult for fraud professionals to piece that information back together. The other thing that people do is when they throw out their trash, they know to shred their hard copies, but they'll oftentimes get rid of their computer and not wipe the hard drive clean. So if they've thrown away computer information, they've gotten rid of an old computer, you can grab that computer and pull up the computer files, and they oftentimes forget to delete their bank information and a lot of other information that you can glean from their computer files. And then credit reporting companies. So they have a lot of information, obviously, about individuals, not only their credit information, but addresses where they lived, information about where they've been employed. And the credit card are the credit service organizations. They share that information with others. You can buy information from credit reporting agencies. You've probably wondered why you get, especially if you own a house, why you get so many applications to refinance your house. It's because the credit reporting agency has sold that information to third parties. So they market that information, and so consequently, third parties make it available through pay sites. So you can use pay sites to gather credit reporting information. That's why with the credit card, credit reporting companies, the credit rating agencies, since they're the ones that can sell your information, they have to allow you the opportunity to opt out of information being sold. And once a year, they send you information about how to opt out, but a lot of people just ignore it because they disguise that in a lot of other information that they send you. So that's something you might want to consider, but oftentimes people don't opt out of it, and so there's a bunch of pay sites available that have that information. Then, as I mentioned here, there's a whole bunch of online databases. A lot of these you have to pay for, but they've done the work for you. So they've done Google searches, found out information about where people live. They've paid for credit rating agency information, and they provide a surprisingly large amount of information about individuals if you're willing to pay. So I'm not going to go through each one of these online databases, but you just know they're out there, and you can some of them are free and some of them you have to pay for, but you can search and gather a lot of information about individuals. And then, like we mentioned, there's just the general internet searches using search engines like Google, Bing, or Yahoo. And like I mentioned previously, you can do the Google searches to take you to those other sites that we've been talking about, like the Bureau of Prisons and other things. Also, in your Google search, you can use advanced searches. So you can go to the advanced search function, and you can just tell Google, I just want to search specific websites. So you don't actually have to go to the website itself. You can just do a Google search, and under advanced search, just put that website name in and say, I only want to search this site. And you can do a lot of interesting searches with advanced search in Google. You can search just for PDFs, or Word documents. So if you sort of know, I think this person might be in a government report or some sort that's in a PDF, you can do the Google search just for those formats. And like I said, you can also do searches just on particular sites. So you may want to find an individual on a county website, a county record website, and you don't want to search that site yourself. Just keep scrolling through it and try and find it. You can just do the Google search, and say, I just want to search this site, and it'll search the search terms that you're looking for. You can also search by exact phrase. So, you searching for somebody's name, that's a common name like mine. If I put Keith Jones in, Keith and Jones are going to appear a lot of times. So maybe I want to put parentheses around my name. But even then, I might come up quite a bit. There's a lot of people who have my name that are famous for one reason or another. It might show up in a Google search. So you can, for example, there's a Keith Jones who was a trainer for the Houston Rockets for the basketball team. So if I keep doing searches and I come up with his name, I can put Keith Jones and then minus trainer or Houston Rockets. There's also a Keith Jones who played in the National Hockey League. I can do minus National Hockey League. So obviously I can put Keith Jones at GMU, and it'll take me, it'll more likely to find me. But there's different ways to search. And like we mentioned, you can restrict the domain. So I only want to search certain sites. So if you're looking for somebody's name, it's helpful to restrict the search to certain sites or to certain search terms, or minus certain search terms that you think will come up frequently. There's also sort of interesting, you can search cached results. So just because somebody's deleted a website doesn't mean that that information is still not available, because Google and other organizations will cache sites. So if there were public records about me on one site, but then they subsequently be taken down, well, a cache search will find a cache is when it's actually saved a former edition of a site in cache. And so you can search the cache and find information that's not currently available on the internet, but used to be available. And there's also not just Google searches, but there's also other search engines that search cached results. So you can do a Google search, for example, and find those cached search engines. So if you know of information that used to be on the web but has subsequently been deleted, you can search cache and potentially still find it. And then searching Google News. So if you want to find out if somebody's in the news, right, obviously searching Google News is the way to go. Don't just do a general web search. Restrict it to Google News. You know, obviously Google Images. If you don't know, you can do image searches. If you don't know, you have a picture that you want to identify the location or something, you can do a Google image search. And then obviously Google Earth, you can look at certain locations without having to go there. So if you want to look up an individual's home to see what it looks like without having to go there. So, and then finally, we have the network method. So you use all of those online sources to gather as much information about an individual as you can. And like we mentioned, you'd use a conversion search to figure out, your purpose is to try and find out how much the person's worth. Because if you can find out what they're worth, and you can look at their change in net worth from one year to the next, then you know, okay, that's how much income that they needed to have earned during the year. And if their income is significantly less than their change in their net worth, then you can be certain that they're getting those funds from some other sources, and that'll help you figure out, okay, how much could they potentially taking illegally or illicitly from the organization. So when you do a Google search, or when you do a net worth method calculation, you've done your Google searches, you've searched other databases and other things, and you've identified how many assets that individual has, right? So you know what they paid for their house, you've been able to glean what they paid for their car, and maybe through bank records you find out how much money they have in the bank, if they have CDs, if they have other personal information. If they have other personal assets, like stocks and other things. Then you can subtract out their liabilities. So if you've determined, through bank records and others that you know what their mortgage is, and if they have car loans or other liabilities. So if you take their assets minus their liabilities, that gives you their net worth. And if you know what their net worth was this year, so let's say they're worth $220,000 this year and they were worth $150,000 last year, then you know their net worth's gone up by $70,000. And if you can estimate based on utility records and other things, like what their living expenses are, then you can figure out, okay, this is how much money they must have earned this year to get their net worth as high as it is now and to have paid their living expenses. So if you can take their income from there and subtract it from what they must have made, then you have their potential funds from unknown sources. And that gives you the extent of the fraud, right? How much they're potentially embezzling from the organization. And this slide just gives you an example of how to use the net worth method. So if you just had an individual for years 1, 2, and 3, they had a residence that's $100,000. They had stocks and bonds that were $30,000 went up to $42,000. They have $20,000 in automobiles that jumps to $40,000 in year 3. They have a certificate of deposit for $50,000 a CD. They have cash in the bank, $6,000 to $14,000. You know about their mortgage, their auto loan. You know what their salary is, and then you can estimate what their expenses are, whether it's their mortgage payment, their auto loan payment, other living expenses like food and gas and insurance and other things. So if you have all that information, then that'll help you figure out how much of their funds came from unknown sources. So you would do a calculation like you do on this next slide, where you have the residents, that's $100,000. They have stocks and bonds of $30,000, auto of $20,000, CD $50,000, and a certificate of deposit $6,000 cash. So then you estimate that their total assets are $206,000. You subtract out their mortgage, their auto loan, etc. That means their total liabilities are $100,000. So that means you think they're worth $106,000. So the interesting thing then is to find out, okay, what about the next year? So the next year, their total assets went up to $212,000, but they paid off some of their liabilities, and now their net worth is $162,000. So their net worth went from 106 in year 1 to 162 in year 2. That means their net worth's gone up 56,000. Then you can estimate, like I said, through estimating what their mortgage is, estimating what the other payments are, that they spent at least 30,800 to live. That means their total income, based on their living expenses plus their change in net worth, must have been about 86,000. And you know that their employer only pays them 40,000. You're not aware of any other sources of income, so the income from unknown sources is 46,800, and unknown sources in year 2. So that means in year 2, the size of the fraud, of the embezzlement, is possibly up to 46,800. In fact, this is most likely a really conservative estimate because we don't know truly how much assets they have. They may have other assets that we've never identified. In fact, they almost certainly do. And they also have living expenses. They've probably also spent a lot more money than what we could identify. So this net worth method usually comes up with a very conservative amount, a very conservative estimate of what their income is from an unknown source. It's probably much higher than 46,800, but at least this is enough to take to court or to show the individual, because we're going to want to get them to confess, and we're going to show them the evidence, all the evidence that we have that through concealment and other things that, or maybe we did video surveillance where we investigated the theft act. So we have video evidence of them putting inventory, for example, in the trunk of their car. We have concealment. We have concealment records to show that they had inappropriately written off that inventory to scrap. And then we also show them here through our net worth calculation that their income from unknown sources that we've identified is at least 46,800. I mean, all those things together, when we're conducting an interview trying to get the person to confess, is likely to get them to finally, confess. And if we carry that over to year 3, you can see that their total assets went up to 246,000. In year 3, they've paid off their liabilities, so their net worth is 246,000. That means their change in net worth from the 162 the year before is now 84,000. You estimate what their living expenses are. That means their total income at the end of year 3, conservatively, was 116,000. They only made 42,000, so that means there's 74,000 in income from unknown sources that you can then present to that individual. And the net worth method isn't just used by forensic investigators. In fact, it's more often used by the IRS. The IRS, this is how they prove that people are underreporting their taxes. The criminal division will do the same thing we've been talking about here today, and they will conduct a net worth method calculation, and then show the individual that you only reported $40,000 worth of income on your tax return. Through this net worth method, we've identified that you made at least $84,000, and your change in net worth is $84,000. If you add your living expenses, that means your total income had to have been at least $116,800. You only reported 42, so there must be 74,800 of unreported income. And that's how Al Capone, for example, went to jail, was unreported income. So they could show that he had a lot more income than he actually reported in taxes. So they couldn't convict him on racketeering or murder or drug charges or anything else, but they were able to convict him on income tax evasion. So the IRS uses the net worth method fairly regularly. Other law enforcement agencies also use the net worth method. If they're investigating potential drug lords or others, they try and figure out what they think they're worth, and then they estimate, okay, this is income from unknown sources, and it gives them sort of the size and scope of their organization, and provides evidence that if they can't get them on drug charges, they can turn around and convict them with the IRS for underreporting their income. So the net worth method is a good tool for law enforcement. It's a little bit tricky because the net worth method is really only helpful for large frauds, where if employees just shoplifting a few items from the store, you're not going to be able to use the net worth method to determine that they're actually stealing. So I've had people do their individual projects on somebody that they worked with in a retail store, and they realized that person was was taking shirts and other things from this retail outlet. Well, you're probably not going to be able to do a net worth calculation on a teenager and figure out that they had stolen some shirts and other things. But for large frauds, where employees are potentially embezzling a lot of money, misappropriating a lot of assets from the organization, using the net worth method is a handy tool that'll get you first, have you identify the scope of the fraud, how big could it be, and then second, it's going to allow you that when you interview the person, if they haven't already confessed, you can then pull out your net worth method calculations and say there's no way you were able to afford the home you live in, the car you purchased, right? We know how much money you've spent on other things. There's no way you were able to do all that on the income that you got from your employer. And then it's going to be hard for them to think on their feet and come up with legitimate explanations to explain this. And so, and we can use this net worth calculation to ultimately get the person to confess. And if our last slide here, what's the best time during an investigation to calculate the net worth method? Well, it's sort of any time, but you want to do it fairly early on to get an idea of how big of a fraud this potentially is, and then also help you identify, narrow down that this is the actual perpetrator, because their net worth has grown substantially and you can't account for it. So now you're pretty confident you have the right person. And now when you go to confront them, when you have all the evidence, that this is sort of the icing on the cake, because you can show the net worth method that this person is worth a lot more than what they're being paid by their employer. So they must be misappropriating assets. So those are the conversion method. Again, now in your individual projects, you just want to be certain that you use the net worth method in an appropriate way.